Hello, and welcome to our weekly chat about what's what. Kath is a financial broker, me, and specialises in helping gain financial security through property. And Tricia, my colleague, is a financial coach and has a mission of family connectedness, creating peace and harmony around the dinner table instead of stress and anxiety due to money worries. Kath and Tricia have been friends for many years. They know how to chat and have opinions on a broad range of topics that will always come back to family, property, home, gardens, Tricia, not me, sport, me, not Tricia, money, entrepreneurial adventures, and so much more. Welcome to our channel and welcome to you, Tricia.
Hey, how you been? Welcome to you, Kathy.
Yeah, not too bad today. So today we're going to have a chat. We usually discuss three different subjects or items, whatever we'd like to call it. And we'll be talking about the 1% buffer, which a lot of people would not be aware of in mortgage broking. You'll be having a chat about our readiness for Christmas and getting organised and some helpful hints and things to plan for to get around that. And then, of course, what's on everyone's minds, grand final weekend. So,
We are Victorians, and
yeah, we're Victorians, we're Victorians. So,
the
so
NRL is on as well,
yeah. Oh, what is that game? What is that game? So we'll get
Oh,
into that a little
anyway,
bit
we'll get there.
later, and we'll have a discussion about that. So,
Yeah. So,
Yep. Sorry about that, Tricia.
no, 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 no. I was going to ask you because I'm out of the loop a little bit at the
Yep.
moment, more so with the lenders. I mean, I know about it, but I'm not into the tin tacks of the 1% buffer that I've been reading about.
Yeah.
Can you
So,
tell us what that
yep.
is?
Yeah. Okay. So I'm going to share my screen. Can you see that there, basically? So
Yeah.
we have Joe Blogs, right? He's going for an application for a loan, right? So
Hmm?
he has a property already. He's single. He earns approximately $90,000 per year. And he actually has a loan of $520,000, and he has enough equity that he only owes 80% of what the loan's worth. So this criteria is not meant for everyone. I'm not a financial advisor, but this just gives you a bit of an idea of how the 1% buffer works, right? He does have a credit card. We've tried to reduce the credit card, but you can see over here from the assessments, which is most of the lenders here that I've listed here, that do allow the 1% buffer. So when you actually go for a loan, the bank usually will, most banks will assess you at 3% higher than what your rate is. So you can
That's
see here
the interest rate, yeah?
what the interest rate is, correct. So you can see here, UBank is at 5.94% and their assessment rate is at 8.94%. Okay. So unfortunately, Joe Blogs, based on the normal assessment criteria, he would not qualify for a loan of $520,000. So
Oh,
obviously, he's not renting the property out. It's something that he lives in. We've tried to reduce the credit card and we still can't make it work, right? So with the 1% buffer, that will then change that rate to 6.94%. So you can see down here, different lenders are allowing different interest rates, which allows different borrowing power. So we sneak down here to, just let me find it, to the special buffer information that we have. So all of these different banks allow for the 1% buffer. There's new ones coming onto the market, but when we change that, it's like magic. All of a sudden, he can lend through UBank, Westpac, NAB, Bankwest, and Commonwealth Bank, right? So that 1% buffer is allowing him then to be able to borrow those funds. There are specific rules and regulations around doing it, but he might be in a rate that's at 6 or 7%. And now this gets him into the lower rate because he's been making those repayments for a minimum of 12 months and he's on a variable rate. So rather than being stuck in the 7-8% range, he can now get a lower rate to one of these lenders at that with that 1% buffer. So there you go.
so is
Any
that
questions?
saying you've shown good conduct in your loan repayments. And
Yes.
so instead of the lenders then saying, well, let's think it's going up by another 3%, that if it goes up by 1%, that's fine. You've shown good conduct in what you've got.
Yeah. Okay. So what the banks are relying on is the good conduct of your account, right? So this is not for a new purchase. It's not for someone that's only been in the loan for 3 months. They usually want to see 12 months of good conduct. And they also normally want to see someone that's on the Comprehensive Credit Reporting Agency. There are a few banks that aren't. So there's slightly different ways that you can get around that. But there can't be, could not have been any late payments on the account. It must be a like-for-like loan. Usually, I think it's Westpac that will allow up to a $50,000 cash out. But the loan structure and everything needs to stay exactly the same. So basically what they're saying is, yes, you've been good on your loans. We're quite happy with that. Pardon me. And we like what you've done. And that's just working. So the main ones here. So see, like you can see here with ANZ. ANZ does do it, but unfortunately in this app, it's not allowed it to adjust properly. So it really doesn't matter, but basically generally it'll normally allow you, that one would adjust as well because ANZ is on that list. All right, so just if I so if I close that and I override that rate, so now technically it's at 4.0. I've reduced the rate to 4.02, and that's just more to manipulate it because literally the rate was at 6.02, and then it shows that it can actually service. So this column here shows you the maximum that Joe Bloggs could get, and he can now get over the $520,000 that he was trying to get. All right.
Right. So okay.
There's the story of the 1% buffer, and hopefully it's a bit more clearer to people on how it all works. And yeah, so
really good for people that are wanting to refinance from the lender that they're currently with. We know that you might be going to a slightly better rate, or you're needing to stretch out your mortgage for 30 years instead of the 25 it might be on, whatever family circumstances you have around that. And sometimes people have just had enough of the lender that they're with too, so they need to change or whatever the circumstances might be. So it's the same property, it's a like-for-like loan type thing, and an option for people that are a little bit restricted at the moment because of the 3% buffer that is the standard, really, isn't it?
As we know, everywhere's tightening, and in the past, banks would not move on that 3% buffer that they allowed for their assessments. Obviously, they wanted to know if it went up, but obviously they've realised that we're at a heightened market now. People are limited in what they can and can't do, and it's rewarding those that have had good conduct on their account. Yeah. You've had good conduct on your account, you're meeting your repayments as they are, so there's no reason that if you go across to the new lender that you still wouldn't meet those repayments as well. Yeah. So
and that's been a frustration of a lot of people, isn't it? But I'm already repaying, the same amount. But
exactly. And why can't I get a lower rate? What's the reason for that not happening? So definitely.
Brilliant. Okay, well that's great news for people that are out.
Yeah, definitely gives people more options. So definitely.
Yeah.
All right. Okay. So next up, we're not far from Christmas, Trish. Believe it or not.
Believe it or not. And some people will go, it's not December yet. I don't start thinking about it till then.
Me?
But realistically, that's when things like a New Year hangover comes in, and it's not the alcoholic type, it's the credit card type, where you go, oh my God, what did I do? Because I wasn't. That's right. So in a couple of days' time, it's 4 sorry, in a couple of days' time, it's 12 weeks to Christmas. So to get started and get organised, make a list of what you need to buy, who you need to buy for, what you think you would like to get for them as a gift. Put a dollar value down against that as well, whether it's the gift or the dollar value. And that gift's going to cost more than the dollar value, so let's go with the dollar value. What else can I find? Also, too, if you start now, you can look out for the sales and you can get what you want at a better price. So you need a list for people, a list for the gift that you're looking at, the value that you want to spend on those people. And it's not just family and friends. You've got work colleagues and school connectedness people and your community people that you might, you know, engage with a gift, even if it's a what do you call those? Lucky dip ones. What are those things called? Secret Santas. All those things.
Santa,
Thank you. So I'm not ready for Christmas. I can't think of the lingo. So have a list ready so that you can shop wisely. Also, too, if you start putting some aside now, you know, it'll ease for next year. And what I suggest is that you actually keep a really good tally of what you spend. And I know this is scary, but you generally spend the same amount every year, and then you spend 6 months trying to pay it off your credit card. So keep a list of what you do spend. And next year, in January, we will start planning for that so that next year's a breeze and you know exactly what you're up to. You know, things change. Kids get older, they don't need as much, or you have value changes and you buy an adventure rather. That's one thing for families as well, buying an adventure rather than lots of little gifts, whether it's dinners or, you know, skydiving, something that you might do, a tour on the bay, a tour on the water, whatever it might be. Have a think about those as well and line them up with your values. Is it family connectedness that you want rather than lots of little things and gifts that'll go in the drawer or in the tip next week? Anyway.
I must admit, I love getting an experience for Christmas.
Yeah.
You know, especially if it's with the person that's given it to me as well. So it really just, as you said, it allows you to have that little bit of time. We're in a fast-paced world that no one really has time for much at all at the moment. We're just basically trying to keep up with life. So,
absolutely,
you know, it's really nice to stop and take that time out as well.
Yeah,
so,
a couple of girlfriends and I have done cooking courses or cooking classes, not courses, classes. Yeah. And last one we did was a gin making experience. And yeah, it was really good. So just different things. Think outside the box of what people would like. And yes, get yourself a present as well. Get yourself a gift and go along with the expense. Well, you would do that anyway, wouldn't you, if they were going out? It's an outing.
Well, I had a dear friend last week that had a high tea.
Really? What a great idea.
It was. And I thought it was a great idea because it's not something that I would normally go out of my way and do. And it was great because I got, you know, a number of your friends, and as much as we've known each other for so long, you know, we have our separate lives and we sort of come together as friends and stuff like that. So it was great to meet those different circles of friendship and make those connections. And, you know, not that you're talking about anyone, you go, oh, that's right, that's who she is, that's what she does, you know. And
connectedness, that's what I like.
Connectedness, it's perfect. So would you have any other hints that you would offer for people over Christmas? So, you know, as you said, it's very easy for us to go out and we go, oh, you know, we really want to get this, want to get that, want to get this, but how do we control that? So how do we just pull that back a little bit and go, hang on a minute, let's think about what we can actually afford?
Yeah, look, and that's really important in that keeping an eye on it from a heart-centered space. So I just go, is this something that I value? Is it something that I think the receiver will value? And that's where I suppose I come back to the gifts and the experiences now, is because they're really time spent with people and reining things in. Look, life is really hard at the moment. And I think that if you actually spoke to your friends and the neighbours or whoever you might buy for and said, look, I just can't do it this year, put it on the table. You may find out that they go, oh, thank goodness, I'm really stretched this year as well. Have the conversation, put it out on the table that we're all experiencing different things this year. So I think that's really important. That there's many times I've gone to places and I haven't taken a gift, or we've taken a gift and we've not been received. And they feel bad or I feel bad. Let's just pop it on the table and say, no, let's just hold back and spend some time together and just come to my place for drinks or whatever instead. And then the other thing, sorry?
Says, let's enjoy each other, getting rid of the elephant in the room. It's like, how much do I need to spend? What do I need to get? What do I need to do?
And I love a Christmas tree that's full of boxes and gifts and things under the table, under the tree. Empty boxes. They're brilliant. They look, my Instagram photos look brilliant. But my bank balance is okay. Anyway, the other thing though, I do want to put on the table, literally, is food. And it's budget for that as well, because we always spend a lot more at Christmas on food, whether you're going out to people's places or if you're hosting, you always spend a lot more money. Even if you were to take plates to somebody else's place, if you're hosting, it's a lot more expensive. So just things like that, spread the cost, make sure everybody brings things. I'm from a large family. Somebody brings the crackers and the bonbon thingies, and somebody brings the serviettes and the soft drinks, and we really spread the load out between all of the people. And it does help a lot. And yes, so food as well is another thing, because you'll be surprised with how much that adds up as well.
Yeah, very true. All right. Down to the all-important business, the grand final this weekend.
I know.
The RBA. I've been too keen to get into the grand final so much, I forgot about the RBA.
Oh, yes. Let's finish with the grand final, get onto the RBA.
Yeah. What do you think the RBA is going to do next Tuesday?
I think they'll hold.
I'm hoping they hold. The inflation rate was at 5.29%. All the economists firmly believe that the rates will go up at some stage by the end of this year, which obviously puts back rate reductions to the middle of next year. So I would like to think that they will keep it on hold just to sort of see what the market does in the next month or so. So as much as it's still sitting a bit higher than what they expected. So, yeah.
Yeah. Can you give a brief overview on what the RBA is? Because I know when I was a first home buyer in my mid-20s, I had no idea. They've been around forever, but I had no idea that they existed or what they did or what the implication was to me as a homeowner and a mortgagee.
Yeah.
So can you just run through that?
Yeah. So what it is the RBA dictates what the market's going to do. So we always talk about the cash rate. So the cash rate is currently at 4.1%. So what that means is that's the rate that it loans funds to the banks and the lenders and everyone else to allow them to loan funds to us, right? All of the banks, not that they're specifically getting it from the RBA, but it just sets a rate for everyone to be able to work with, right? So basically by them setting the rate, then the banks are dictated by the RBA cash rate as to what their interest rates are. Usually you would like to think that the banks have a 1.5 to 2% buffer on top of that cash rate. Hence our rates around that 5.5 to 5.6 up to about 6.2% on average with most of the banks. So, and then if their cash rate goes up, then of course the bank is going to raise their rates. If the cash rates come down, at times we know the banks will reduce those rates, but they won't always pass it on as quickly as we would like. So basically that's my understanding. I'm not a professional.
No.
but within reason, just simplifying it, that the cash rate dictates what the interest rates are going to be on our loans, and that's what we care about, is the interest rate on the loan. So if the RBA puts that cash rate up, inevitably we're going to get a rate rise from the bank, unfortunately. So
as much as you're saying you're not a professional, you're very professional, because you explained it so much better than I would. But
oh well, yeah. Anyway,
we're not economists, though, are we? So
yeah, we're not economists. We're not financial planners or anything like that. Yes.
Yeah.
So at the moment, they meet 11 times a year, right? So the only time that they don't meet usually is in January. That will change from February 2024 to meeting 8 times a year. And it's supposedly on average, I don't know exactly what times they're meeting. For us, we always knew the first Tuesday of the month, that was when the RBA was going to meet, and then that would determine what would happen for the rates. But as of next year, that's all changing to be 8 times a year as of February 24, and I don't know exactly what the dates are, but they will determine those. Yeah.
It's going to be really interesting, because it's like we have such a pattern and a sequence now of, is it going up or down? Is it going to stay or hold? Whatever.
Yeah,
but
exactly.
Now we're just not sure. We'll wait and see next year, and we'll let people know then what's going on.
Yeah. So I like to think that it will stay on hold as well. So yeah, let's see what happens. Now the all important stuff.
Crystal ball. Who's going to win?
Oh, the grand final. I was trying to explain to someone the other day that's from overseas, and I said Collingwood's a team that everyone loves to hate in Victoria. But unfortunately, Brisbane's an interstate team, which no one wants an interstate team to win.
And to be fair, the people that barrack for Collingwood, and there are many, many, many of them, love them. But it's that thing of rivalry, Yeah. We actually love the rivalry rather than hating the game, hating the team, I think,
Definitely.
Yeah. So I think, though, Collingwood will win. They've been a really good, strong team this year. They've led the way, absolutely, on, the minor premiers. Yeah, I reckon Collingwood. Short.
Yeah.
I don't think it'll be a long...
I reckon Collingwood too. I think they've been, as you said, they've been the team to beat all season. They've enjoyed their footy. I love seeing the boys, enjoying the game. And I know it's a professional game, but they're playing it because they loved it. And it's great to sort of have McRae basically.
It shows through on the way they're going.
Yeah, he's brought that back. It's it's just having a bit of passion about what you do, and I think if you love it, you just play it so much better, rather than it becoming a job. So yeah, definitely.
They look like they're in the flow. They're just in the flow with it, so they're doing really well. Well, I think, as much as I know about the game.
We'll give them,
I'm going to go for...
Yeah.
Sorry?
We'll give them the grand final this year, but not next year.
I'm going to say by 10 points.
10 points. Yeah, I would like to think it's a close game, and I don't think Brisbane will go away easy. The only reason I think Collingwood could come undone is if they get a few injuries early. That's 10. Usually that can kill you if any team. So hopefully they'll stay healthy and everyone stays healthy on the field and they get a good slot at it. So I'm going to say 15 points.
Okay. All right.
Okay.
Well, you got your Collingwood colours on today, so you'll be right.
Oh no! Don't tell Michael that I'll be barracking for Collingwood. Oh my god! But anyway, I suppose we should quickly I didn't know who's playing in Sydney. There's the NRL grand final. Not that
It
Sydney's
is.
irrelevant.
No. And Storm are out though. So to
I know.
be fair, I'm not a league.
No,
I'm not.
they got they got absolutely smashed by Penrith. So anyway, I'm not a
Yeah.
league person. I still follow it a little bit, but I'll go
Oh
with
yeah.
Penrith. South Wales
Yeah.
Lakers.
All right. Well, I'm not sure. I'll have to have a relook at that. Anyway, you better wrap up.
Okay, well, thank you very much for watching our channel. Really appreciated. We're going to sign off. Basically, if you've got any burning questions, if you want to like and subscribe, put them in the comments below. We'd love to hear from you. All the best
Awesome.
and take care.
Thank you, everyone.